Welcome back, investors, to Ticker Time News. I'm Adam, and the Fed, or should I say, is the Fed willing to overshoot when it comes to tightening its monetary policy and hold the Fed funds rate at 5% or higher for the entirety of 2023? This is exactly the statement that caused the markets to change direction midday today. And guess what? This could have a big effect tomorrow. Why? Well, we got Fed speak today in that exact statement that the Fed is willing to over tighten to keep inflation low, and they are willing to keep the Fed funds rate or interest rates 5% or higher for the entirety of 2023. Now, tomorrow, Fed Chair Powell gives a speech, and here's the title of it. It's titled Central Bank Independence. What do you think that means? Central bank independence. Are we talking about a digital currency for the central bank? Are we talking about the central bank and maybe having more or a tighter control over monetary policy and so forth? I don't know, but that title, Central Bank Independence, given by Jerome Powell tomorrow, is going to be extremely interesting. And how's the market going to handle that one? Today, the market completely changed direction on a statement about over tightening, meaning that the Fed is going to break something. It's going to keep monetary policy extremely tight, that something is going to break. And then who knows what then, right? Because the tools that the Fed has at its disposal is typically lowering interest rates to help a economy that is coming to a halt. So there's a lot of questions out there now with that statement that the Fed is willing to over tighten. But before we start talking about the Fed in more detail, let's start at the beginning of today, okay? Now, you see on the screen here the heat map of the 11 S&P 500 sectors, and it was a mixed day. At one point, things looked really good this morning. Today's trade, it picked up exactly where Friday's left off, building on gains based on a belief that the Fed won't have to raise rates as much as feared, and that the U.S. economy may actually get to see a, quote, soft landing after all. But with that statement made later in the day, I'm not sure a soft landing is coming. Now, that thinking did fuel buying activity in the bond and equity markets to start the day. The initial push higher was likely also supported by investors putting some money to work by the fear of missing out. Yeah, the fear of FOMO. FOMO wrecks so many investors. All right, let's get off this heat map here and let's go to the chart. If you see the candle that was made today, it looks like a shooting star candle, all right, which is, it was made right here today. That is typically a topping pattern type of candle. It means that price was driven up, but then sellers stepped in and caused price to drop dramatically. And you can see that with this candle here. Plus, we're disconnected from the 5-day EMA. And one thing that is also interesting is we were at the close of business on Friday. The 50-day moving average acted as resistance. Today, it did not. Okay. The markets this morning opened up above that 50-period moving average. And it was above the 20-day moving average because it did that on Friday. But we're still under the declining 200-day moving average. And you know the old adage, nothing good happens under the 200-day moving average. So we still have to contend with that. And it's interesting that the 200-day moving average is kind of following the 2022 resistance line that we had, this downtrend line that we had all throughout 2022. The 200-day moving average is literally right there, going parallel with it, going down. All right, let's clean this up right quick, and we'll keep moving on. Oh, there is a poll in the live chat It's just a yes or no. Do you think the Fed will over tighten its monetary policy? Meaning, will the Fed continue to take liquidity out of the markets, and will the Fed continue raising rates? That is tightening, and that's their monetary policy right now, to do exactly what I just said. So yes or no, whether you think the Fed will go too far with the monetary policy right now, which is taking liquidity out of the market and raising interest rates. Let me know, yes or no, in the live chat there. Okay, let's keep moving on. Now, the fear of missing out, right? We had a ginormous day on Friday, big gains everywhere. We broke out of the ascending triangle, which was a neutral position, so it could have gone either way. Breaks out of that. It also breaks above the mid-December resistance that anchored VWAP to the low of 2022, which occurred on October 13th. And then it broke that 50-day moving average, which came down like so. But now it closed right barely above the 200-day. And there is a gap there, right there, between where the 5-day EMA is. And that is a very important trend line that these candles need to stay connected to. If they don't, then it kind of breaks, and it's your sign of FOMO, fear of missing out. When you see that disconnect, and the larger that disconnect is, don't go rushing in to start buying that equity or ETF or whatever the case may be, because you're buying at the top at that point. So don't do that. Don't chase it. Wait for the setup. Be patient. Patience is your friend. Now, looking at this, let's go to the 15-minute chart here and take a look at this. I'm going to take off the normal moving averages and just put the 5-period moving average on the screen. Let's open this up. Now, I do have the Fibonacci up here as well. It's going from that December 13th high that we had and going to the bottom that we hit a little while ago, I think December 22nd or so. And we broke today the 50% retracement. It's the, let me get the chart here. All right, so that 50% retracement is this blue line that's running across here. And you can see it acted as resistance on the way up today, and then broke through it, and then it stopped right here midday or late morning, depending on your time frame, at 39.50. Now, 38.50 was a huge sticky place where the market kind of, bounced around. That was like the midpoint of it. Now we get stopped at 39.50, but we also had the Fed and Fed speak today, causing that turnaround. Then on the way back down, that 50% retracement level acted as support there for about an hour before finally breaking through, right? And once it broke through that, then it tried to regain some sort of confidence and momentum there, keeping it quite level there with the open of today, but it failed ultimately, and then selling off into the close today. So a couple things that are important there to keep your eye on. Number one is the 39.50 level. Will that become our new resistance level that we have to pay attention to? And then number two, since we broke above the anchored VWAP that has been very stiff resistance on Friday's trade, if we come down further, will we find support there? That's the second question. And right now, that is sitting at, that anchored VWAP is currently sitting at, let's call it 38.70. So write that down, 38.70. well, 39.50 as resistance. I'm going to write this down while I'm saying it too, so I can remember during the rest of this week whether these numbers and levels pay off or not. And then 38.70 as possible support. We'll have to see how that actually breaks out. Now, the 5-day moving average, which we need to reconnect with, we're coming in hot to it. So today, it was inclining for the most of the day, okay? And then it started to kind of curl to the flat side as we get to the last 30 minutes of the day because we had all afternoon selling pressure. So right now, it is inclining slightly. So that should give you at least a little of a positive bias when looking at the short-term time frame on, okay, where's this going to go, right? We could open up tomorrow and stay flat right here around 3,900 because that's an interesting area, right? 3,900 has been, for the majority of the past several months, a very sticky number as well, or a very sticky level as well. So 3,900, maybe we open there tomorrow, we float around it. It depends on the headlines, right? The headlines are what's driving this market, okay? So the S&P 500, it did climb above that technical resistance 50-day moving average that I mentioned earlier, and that's sitting at 39.06. So a few months ago, when we were at this level, 3,900 to 3,910 was a support area for the market. Will that become support now for the market as we open up tomorrow? I don't know. It is a possibility that area does become support. It could very well do that. And if it did, then we would see the 5-period moving average maybe start to flatten out if we just start moving sideways from this 3,900 level. But Jerome Powell, he comes out and speaks. Let me pull this up. This is his calendar right here. Tomorrow at 9 a.m. Eastern time. And there is a link that you can watch this live. And again, here's that title: Central Bank Independence. What in the world could that mean? I mean, I'm thinking digital currency. I'm thinking that the Fed's monetary policy. I don't know, right? And this is taking place in Sweden, in Stockholm. So it's not here locally. But that title is really getting some people thinking about what in the world could Jerome Powell be announcing in Switzerland tomorrow, and how is that going to then affect the market, which is currently, at least at this point, it's still kind of in a neutral setting, okay? If I clean up these blue lines and we go back to, give me just a quick moment to clean it up and go back to the daily view, and then I'll get these moving averages switched up too while we're going there. And I'll adjust the chart. Give me a quick moment. Set this up. I mean, the shooting star candle, okay? You can see Friday we had this big green candle, and then today, you know, we get this, the body of the candle, it's about yay big, and then the wick of this thing goes all the way up to the 50% retracement level, 39.33, and then it went just a hair above it to 39.50. So at that point, the S&P 500, it was up 1.4% today at its high, and then it closes basically flat. The SPX, the SPY, they both close flat, right? Because they're tracking the S&P 500. Now, the NASDAQ and the Dow, the NASDAQ was up 2.3% at its highest point. In the Dow, it was up 0.9% at its session high. Now, the NASDAQ was able to close up 0.65%. The Dow actually lost today. It was down 1/3%. IWM was up 0.2%, and then mid caps were flat. So your not Dow companies, but your bigger market cap companies actually did pretty good today. Your I forgot the word. Your mega cap stocks. Why did I forget that? Mega cap. Why did I forget that? They actually did kind of decent today too. Now, the rally effort did lose that momentum in the afternoon trade, like I just showed you on that 15-minute time period. The downturn coincided exactly at the time that the Atlanta Fed president, who, by the way, is not an FOMC voter. Now, Atlanta Fed president has some sway, right? Are in the discussions on what to do, but cannot vote on what to do. Now, the Atlanta Fed president is the one who said that the Fed is willing to overshoot when it comes to tightening. And then also added that rates should be at 5 or plus % for a quote long time. And we know from Fed speak last week that long time is the entirety of 2023. From the notes that we got from the last December FOMC meeting, nobody is thinking about lowering rates in 2023. So when you have Fed speak, you get little bits of information here and there, and then you've got to put them together, connect the dots, as it were. So with the notes released last week saying that nobody's considering lowering rates in 2023, and Fed speak today saying the Fed's willing to over tighten and hold rates 5% or more for a long time, we're starting to get a picture here. Now, what Fed Chair Powell says tomorrow, it could have something to do with current policy, but the word independence has me thinking that he's going to talk about something different tomorrow. Maybe a digital currency. I know I've said it now 3 times, but central bank independence as your title, what else gives the central bank independence? A digital currency. So something to think about. YouTube was super late to alert. Yeah, I don't know what to do to remedy that situation. I know for me, the Discord notification I get like within seconds of scheduling the live stream. I get the notification on my phone. I also, from Patreon, get the email about the live stream within a minute or so of sending it. So I don't know what to do about YouTube because the notifications, they're not perfect and they don't work sometimes. There are creators that I follow for, different subjects and topics, not in the finance space. And, I have the bell notification turned for, all notifications. And then a video comes out. I'm like, oh, wow, this video came out 2 days ago. And I'm just now getting the notification. I'm like, what in the world, YouTube? So I do apologize. I know it's a pain in the rear, but I don't know what to do about those notifications for YouTube. Maybe Discord's an option. And I don't even know how the Twitch notifications work because I don't watch or use the Twitch except to stream there. And it just, I don't know how that notification system works. So I don't know the best remedy for this except for Discord. But if you don't use Discord, then it's pointless to download the Discord app just to get one YouTuber's notification. But that notification is instant. I do know that. For sure. All right, let me just quickly finish up my thoughts here. I will talk about Palo Alto Networks, absolutely. Let me just finish my thought here on this. All right, so the Fed speak today came from a Bloomberg article. Now, ultimately, the S&P 500, it did close below 3,900 level, despite market internal showing slightly positive margins, because advancers led decliners by a 3-2 margin at both the New York Stock Exchange and the NASDAQ by the close. Roughly half of the S&P 500 sectors closed with a loss today. Consumer staples, XLP, down 1%. Healthcare, XLV, down 1.7%. They were the top lagging sectors today. Now, some of XLV, which is healthcare, their large cap biotech composites, they were the ones that pushed healthcare down today. Now, if you think that biotechs are heading down, one easy way to short them is with this ticker. Oh, I gotta get my cursor. My apologies. Okay, it is LAB, lab, and then the letter D. Okay, this will take you to the direction daily S&P biotech bear. Now it's leveraged by 3 times. So if biotech goes down by 1%, this goes up by 3%. And this was up a nice 5.28% right here today. But if you look at the chart, it's kind of sitting on a bit of a bottom right now where I don't think it's the greatest place to short. You see the downtrend. It was marked by the high back in September. Tagged it again here. So it's not a very strong trend line with only 2 marks on it. But there is bottom support down here. And it's been tagged multiple times. Right around the 1650 mark, and basically closed at 18 today. So we're getting into about the midsection, okay, for biotechs, and the inverse. All right, that's what we're looking at. We're looking at the inverse of the biotech sector. We're kind of getting into the middle of the range. I would prefer that if, biotechs did go down tomorrow a little bit further, causing this to go up, and then we tag this downtrending line and get rejected there, this thing falls, and then once we get back to the bottom, then you can start building out a position here to short the biotech. So again, that ticker is LABD. It's like Lab D, okay? So this will do the trick if you want to short biotechs. Now, information technology today, it was up 1.1%. In utilities, which is defensive, that was up 0.6%. They were at the top of the leaderboard today. And then the bond market, it was able to maintain its gains into the close. Let's look at the 2-year first. Right over here, let me click there. Look at the dollar. I'll look at Palo Alto Networks, and then I'll do the indices for you and talk about what to expect tomorrow. Now, the 2-year continued to break down here. Let me open this up a little bit more, bring it down some. All right. So the 2-year just continued its fall, had a big move last Friday, and then today it fell 7 basis points to 4.2%. It's sitting there right now. It's hardly moved in the after hours. This is sensitive to the Fed funds rate. So the Fed, or Fed speak today, saying 5% or higher, holding rates there for, quote, a long time. The 2-year dropped a whole percentage point. Now, let's go look at the 10-year, and you'll see the same thing. Okay, this helped the markets this afternoon to kind of get back to even. Some of them, like the QQQ, even with a positive today. So even though last Friday, big drop here, and it fell outside of its declining trading channel, it's holding right there at that support line today as a resistance point. That's what it did today. And then support seems like it wants to maybe build right through the midsection right here of all of this chopping around that we did all through December right here for the 10-year. So if that could hold as support, that wouldn't be good for the Qs. But if it continued to fall and break that support, that would be good. That would be good for the Qs. All right, so the 10-year today, just to put it on record here, it fell 5 basis points to 3.52%. Now, one more quick thought, and then I'll get to Palo Alto Networks. Today's economic data, it was limited to consumer credit. Let me pull up XLF, which is the financial sector. Consumer credit, it increased to $27.9 billion in November. Guess what October was? October increased by 29.2 billion. So the takeaway here is that total consumer credit continued growing strongly. Really strong in November, despite rising interest rates and expectations for more Fed funds rate hikes in the near future, February 1st. It's not good. Savings rate right now is practically zero. Consumers are spending heavily on credit cards. You can go to the Fed website and you can get all this data and see it for yourself. None of it is good for the consumer. This is leading us to our recession. Just want to point that out. Okay, dollar, and then Palo Alto Networks, and then back to the indices or your questions, because your questions are the most important part. Okay, the dollar today, like, let me raise it up a little bit higher here. Now, the dollar on Friday made a big move down. Thursday, big move up. Friday, big move down. Today, it broke out of its sideways trading channel that it's been in. We could go back to December 13th, and it's been trading within this range. It finally broke down below that. It broke down below that. It closed at 103.17. Bottom right-hand corner. We're at 103.11 in the after hours. So, my main number for the dollar is 102.5. If the dollar breaks below that, watch out. That thing could fall fast and hard. What does that mean for the equity markets then? If the currency is dropping and falling like that, that would be a bullish or positive sign for the SPY. A really good sign for the SPY, a really good sign for the Dow. Will it do it? Will it actually break that 102.5? Or was this breakdown today just a little fake out? We'll see. We'll see how it goes. Okay, let's go to PANW. That's the ticker for Palo Alto Networks. I think cybersecurity is a theme overall that you want to be engaged with. Cybersecurity, as we continue to advance as a technological society, cybersecurity and its importance will continue to expand. Now, out of all of these cybersecurity companies out there, one of my favorites is Palo Alto Networks. I like them a lot. All right, let's dive into this chart here. We're going to go with a big bird's eye view first, and then we'll dive in closer, and then we'll get into the 15-minute time frame to figure out where this thing is headed. Now, the reason I'm doing this is because I want to show you there has been a very powerful section for Palo Alto Networks, and it has been running inside this triangle right here. Oh, I went a little too far. Right there. If we go back, and actually I can bring this back a little bit further to the first time it popped in here. We can go all the way back to the beginning of September of 2021. We're in 2023 now. Okay? So going all the way back to September of 2021, all the way through to December 15th, Palo Alto Networks was going sideways. It was just an up and down, up and down, up and down trade for over a year. Now, let's look at the last time it got down this low. Okay, let's mark off a couple of things. Number one, we have to mark off this gap right here. Okay, it was a big gap on earnings. Big momentum came in, and this was August of 2021. Big gap right there. It hasn't completely been filled, but it is working on it. It's halfway filled with the past few days of Palo Alto Networks decline. Now, another point to mark is right here. These are the highs going back to July and August of 2021. That matches up precisely where Palo Alto is today. Let's find a couple of other spots that are important. Let me just back this up a little bit. Okay. Right here, going back a little bit further, this is February of 2021. That matches with the top in July of 2021 and where Palo Alto is right now. The solid thing is that there's no major gaps between those two peaks, either going down or when it came back up. That's a good thing because gaps get filled. Now, just for fun, the 2019 high would be right here, and this would have been set in November of 2019. It's also a very interesting price level. $85 a share. Let me come back down there and mark that off. All right, now let's dive in a little bit closer. Okay. Let's open it up some. Okay, now once Palo Alto there's a few times Palo Alto has broken that box. Number one being back here. This is May of 22. Again, here, 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 and right there, even though there were a lot of gaps made right there. And then, of course, the latest breakdown right here, okay? All right, so that was a very important support area for Palo Alto Networks, which sits currently at around $155 a share. If Palo Alto can pick itself back up, this is going to become resistance on the way back up. Again, right around $155. Let's open this up a little bit more as we're doing our technical analysis here on Palo Alto Networks. This has been a very strong decline. As a matter of fact, I need to get a trend line and line it up here. Where can I line up the most points? Because on a trend line, you need how many points? How many touch points do you need for it to be valid? You need 3. 3 or more. Let's go right there. So 3 or more touch points is what makes your trend line valid. Now this one doesn't line up perfectly, and there's really only 2 touch points there. So let's, instead of going from a bigger perspective, let's go to a smaller perspective. And let's see where we're at. I got to open this up a little bit more to dive into it. I'm going to bring it back up. Okay. All right, let's get our second trend line on this, which doesn't really line up very well. But if it did, if this right here was Palo Alto Networks, it looks like we've got maybe around, let's call it 130 as the low, okay? And then right now we're running into resistance around 138. So that's not a real big spread right there. But if Palo Alto, what do we have here as a chart pattern? We have it pulling down. So expansion then leads to contraction, which then leads to expansion. So I would suspect that price action starts to stay between these 2 lines, and it's either going to, move sideways, or it's going to move diagonally, with it being, up and down and up and down until it finally breaks out of this. Now, let's go over here to our chart patterns. And when we are looking for a decline, okay, we could call it a falling wedge right here, where price has moved down. We have price then contracting or consolidating, and then we typically reverse from that. So as a chart pattern goes for Palo Alto Networks, this one's not bad. This one's not bad at all. We had our expansion, which led to contraction, right? Expansion, just one more time, contraction, and this can lead to a breakout, a reversal. So if you're looking for a reversal, you really want to see Palo Alto break and hold that 137 to 138 a share, that price point. That's what you want to see it break. And then start breaking previous day highs. Now, if Palo Alto continues to move sideways, then price action should start to contract a little bit, where the swings, like today, I mean, it was flat. Friday, it was flat. Last Thursday, down 2.5%. That's significant. You should see price start to contract in Palo Alto's predicament. Start to narrow like it's done for the past 2 days, or price is basically flat. I mean, it was up 0.2% today, 0.2% down on Friday. That's what you want to see now. You want this price action to slow down. Once it slows down and it's in this contraction phase, then you're looking for the breakout. Let's go in a little deeper here. Okay, we'll go to the 15-minute time frame and see how things look down here. Now I'm going to take a couple moving averages off the screen and then put the 5-day moving average on the screen. And let's open this up. Okay, now we've got the past several days on here. And there's a few positives here. Okay. All right. Number one, the gap that was made right here. Okay. It's been filled. It's been filled. It was filled today with today's drop here. Okay. And again, we've got several trading days on here. The other good thing is that the 5-day moving average was declining, which gives you a negative or bearish bias on the short. Over the past couple of sessions, it wanted to start to level out, which is a good thing. And the reason it started to do that is because of this incline right here. Okay. If this support where it's at right now can hold, that would be really, really good for Palo Alto Networks. Now, if I open this up just a little bit more, so we can look for the price points that need to be held. Okay, the low one down here on where the blue highlighted mark is, that low is 132. So if it can hold 130 to 132, that would be an excellent point. Because if we come over here, remember the lines that we were drawing. We have this line going here and this line right here. If that boundary is respected and Palo Alto moves between there, that would be good. That's contraction. That's what you want to see. And then we start looking for breakout points. All right. First off, the gap up that was created right here. Okay. That gap right there. Palo Alto closed right with that candle, right where that gap up, right where it started. That's a good sign. If it could hold that line, that would be excellent. That's like 134 to 135. So what you want to see is Palo Alto hold up between 130 and 135. In that $5 zone, you don't want Palo Alto to break below that. That would be a negative, okay? So right now, we have a negative or bearish bias on Palo Alto Networks in the short term. It can continue to go down, but you want $130 a share to be held as support. You don't want it to go lower than that. Okay, there we go. All right. So just a couple points there on Palo Alto Network. It is struggling. But a positive through this struggle and through the breakdown, at least technically on the chart here, is that it already went through its expansion phase. Now it's in a contraction phase. And you want to see that contraction in price to slow down. And then potentially look for a breakout on this. Okay. All right, just double checking. That's everything there for Palo Alto Networks. THT. Oh, short seems like a good short. Are you THT or TLT? What do we have? All right, come on, load for me. Energy, coal. Oh, I must have typed something wrong. THT. Oh, that does seem like a good short. I understand now. I thought that was a ticker symbol. What in the world was I looking at? I was looking at something not even in the US. Not even in the US. I understand now. My bad. My apology. My apology. Hey, since I brought it up here, let's just go look at TLT right quick. Because remember, as we transition to stage 1 of this cycle, this long-term bonds are going to outperform the SPY. And what were we looking for here? Remember the last time I pulled this chart up, the last time, we had the breakout from the long-term trend line that acted as resistance for over a year for TLT, which is the ticker. We had the back test, and then a successful back test meant what? That we would go higher. And that's what TLT is showing us right here. It's showing that it's going to go higher. If you want to go long something, long ticker TLT. What did it have today? It was up 0.5%. Compare that to the SPY of being flat. It beat it. But let me just real quick, just as a reminder, the right side of this picture, of this graph, we're exiting, or we have already exited the right side of this image. We are now coming into the left side of this image. We're coming into the left side. We're going from the end of the cycle now back around to the beginning of the cycle, where things start to contract all around us. And the thing that performs the best in this stage 1 period of contraction is bonds. Stocks and commodities continue to go down when we're in this phase. Remember, the economic data that came out last week, it showed contraction. Everything is contracting all around us. The housing market's contracting. The liquidity is contracting in the markets from the Fed taking billions out. It's just something else. Okay. Lululemon. LULU. I think Lululemon, it could have something going on for 23. Excuse me there. All right. Let's look at the chart. Get our moving averages right. If you really look at this thing, my goodness, falling nearly 10% today off of a doji candle and a 1% gain on Friday. I don't know what the I don't know what the specific news was today that caused Lulu to drop. Margins for the holiday quarter disappointed. Okay. You know, tomorrow, retail stocks are in focus tomorrow. Let's see here. Margins for the holiday quarter disappointed. How bad were they? Okay. Management continues to expect inventory to be up 60% exiting Q4. The positive readout from the ICR conference was that SG&A performance offset some of the margin decline. Bank of America analyst also noted that core styles were brought in by Lulu early to help avoid air freight costs. Following the holiday quarter update, Bank of America kept a buy rating on Lulu and said it continues to see Lulu as a best-in-class growth story in a challenging macro backdrop. Okay, I can respect that. Down 9.3%. Its first trip below 300 since October. All right, that gives us some context here for what's happening and why it fell so hard today. Let me get. I mean, this thing has just been a wild stock, but I think Lulu, it does have a good growth story. Okay, it is a growth stock, right? It is a small cap growth stock, so you have to be careful because the volatility here is going to be dramatic. I mean, just looking at the daily chart here in front of us all, you can clearly see the volatility that is played out in this stock. For me, this is hands off until we're done with all the macro stuff. Once the macro stuff is all done, once the recession fears are gone, once we've, either the fears of the recession are gone or we've gone through the recession, I would be hands off on a growth story like this. I just don't want to get burnt from the volatility. The volatility can really eat you up. There are some huge swings on this stock chart in front of us right now. And with consumer credit growing really fast, that's not good for retail either. Okay. But tomorrow, this plays in with Lululemon. Let me just touch on a couple points here about tomorrow, and it's going to help with understanding the retail situation. So first thing on my notes for tomorrow, okay, pay attention to Albertisons. All right, let me pull that up. The ticker is ACI. And you want to make sure that you're picking NASDAQ here. All right, for TradingView, for some reason, it doesn't pop up first. But Albertisons is the biggest company reporting earnings tomorrow. That can have a big sway. This is a grocery store type of chain of stores. It's going to be very important for retail. Okay. Let me pull this chart in a little bit tighter. You can see it's had its own volatility around its last earnings. Huge volatility back then. Let me just open this up here. But Albertison's reports earnings and things are going to move on this. Now, with last earnings, okay, let me pull this up. What happened to it? Why doesn't TradingView have it? That's odd. What happened? Something had to have happened. Notable earnings before open. Okay, Catalyst watch. Okay, earnings week ahead. Okay, well, they've all got them in there. I don't know what happened to this earnings back here. I'll have to look it up and figure that out. But a huge drop. How far was it? Nearly a 24% decline. I don't know if earnings were just bad or they didn't have them. I don't know. That something isn't right there. But if we go from this decline, right, we throw a trend line just like so, okay? So we're in an uptrend in the short time, okay? And then if we try to put a cap on this thing, we only have 2 points of contact, so that's not the best thing that you want to see. But we do have what looks to be a symmetrical triangle, which can literally break either way. If I put the stock chart back up here, and again, this is for Lululemon as well, right? This is still in the retail sector. Chart patterns down on the bottom right of this chart is the symmetrical triangle down here, right? Where you have nearly an even top and bottom, resistance, support, and it can break either way. It's a neutral chart setup. So that's what we're seeing right here for Albertisons. Now they report tomorrow. Just as a quick little side note, because I know a bunch of people watch this particular story, but Bed Bath & Beyond, triple BY is the ticker. Again, retail sector. This thing has been horrible. However, it's wild. Look at this. Today, up 24%. Bed Bath & Beyond, a company going bankrupt, up 24% today. This is one that has totally broke loose of reality. That's all I can say. This one has completely left the realm of objective reality, okay? And it looks like a real tiny move here because now, I mean, the thing's $1.62, okay? So a 24% move was only 31 cents. Not huge. Okay, so we've got this one to contend with tomorrow as well because we've got earnings on this. We're looking at a loss of 2.6 billion. I'm sorry, $2. My apologies. I'm looking at the wrong number, saying the wrong thing. Okay, for earnings, we're looking at negative $2.61 a share. Revenue of 1.3 billion. Okay, a company like this being up 24% where's the objective reality for this, right? This is just one of the momentum stocks. Yeah, I mean, it's jumping because earnings are coming up. I don't get it. I don't get it. But it's in the retail space, you know, whew. Yeah. Okay. Let's keep moving on because there's more here. All right. Oh, that's right. Bed Bath & Beyond, they pre-announced their earnings or partially. That's right. That's why they're up 24%. I don't know why it's not updated here on TradingView. But again, all reality out the door. Now, the reason I'm bringing up Albertisons, Bed Bath & Beyond, and Lululemon is companies in the retail sector present at a conference tomorrow. There's this conference, it's called the ICR conference. It's happening right now. Now, the reason this is important to watch is because a lot of companies are giving out guidance for their earnings, okay? So like before their earnings come out, they're doing a presentation and they're saying, okay, we feel like we're going to be able to do XYZ this quarter. So that's good or bad, you know, depending on what their guidance is. But Crocs is doing it. Ticker is CROX. Urban Outfitters, ticker URBN. Shake Shack, SHAK. Dutch Brothers, which was a big momentum stock as well. The ticker is Bros, BROS. And Planet Fitness, ticker is PLNT. Guidance updates are anticipated throughout this conference. So the retail space, and if you just want a broader view, XRT is the subsector. It's the retail ETF. So with all of this guidance coming out from all of these different retail type companies, it's going to be important, and you can track it with the ETF if you don't want to look at the individual stocks. Now, it was down 0.5% today, but it is in its local time frame with just the past, couple weeks. It's in an uptrend, but it is running into a very tough area of resistance. It's 50-day moving average. It broke through it today, but fell. It's leaving almost a shooting star type of candlestick. And just a reminder, on the candlestick chart, this is your shooting star right here. Okay. Now, for the shooting star candle, you have an uptrend, right? And this is a bearish because you go up, right? And then the candle itself, there is a big wick on top of the candle. That's why it's called a shooting star. All right. So the candle, let me just kind of try to draw it a little bit bigger here. You've got the body of the candle, right? All filled in. It's all red and negative. But then you have a long wick on the top of the candle. After you've been inclining for a few days or 2 days or whatever, you hit that shooting star and it's a reversal. It's a topping pattern. Okay. So what this is showing me is we saw this with the SPY and the SPX with the S&P 500, a shooting star type candle. That typically means we're at the top and we just went up and now we're going to go back down. That's a possibility to pay attention to. Okay. All right. Now, also, Intel. This is kind of jumping a little bit out of retail, But Intel is also an important one to watch tomorrow. INTC. Now, I have faith in Intel. I like Intel as a company, but Intel is going through a transition right now. Okay. But tomorrow, Intel has a launch event. One of the bad things is just locally here on the chart, it is at a period resistance, resistance, a whole bunch of chop, and now we're at resistance. So if Intel's launch event doesn't cause analysts to jump for joy, then Intel could be on its way back down too in this sidewards moving market. Now, at the launch event for tomorrow, what Intel is launching is its 4th generation Intel. I think it's is it Exxon or Sugar? I can't remember. Oh, what is the word? It starts with an X, and I can't remember it. Oh my goodness. Xeon. Anyways, Intel Xeon or something like that. It's scalable processors. And then the Intel Xeon, maybe is what it's called. It's CPU Max Series. That's getting launched tomorrow. It's data center GPU. That is getting launched tomorrow. And that's for high performance computing and AI. So Intel has this big party tomorrow. And what's going to happen? If it's at resistance right now, I mean, that launch party's got to be a pretty big deal to get the stock to go anywhere. Now, if things are good, then, really we're looking at $30.50 as like the next area where it could go. And then it would probably get shut down there unless Intel says something absolutely amazing tomorrow. Then it'll get shut down because we're at resistance. So it's got to be something absolutely, positively banging for Intel tomorrow at their launch party to get the stock moving. I'm not saying it can't happen. I'm just saying it'd be a lot nicer if the stock was a little bit lower. Because what this looks like to me is buy the rumor, sell the news. Buy the rumor about the launch event and then sell the news when they have the launch event. That's what it looks like we're moving up to. Okay, let's get over here to some more of your questions. I don't want to miss any of them. Fed is bugging me. Yes, the Fed is bugging me too. With the Fed speak we've got today, that's what caused markets to drop and take their eye off of the gains that they received earlier this morning and on Friday. The Fed did that. The Fed does not want this market going up. Not at all. The economy isn't as terrible as folks egg on. I can see your point with that. Right now, things look okay. And the reason for that, you look at the labor market. The labor reports that we got last week and the week before, they are saying that the labor market is still okay. It is still strong. It's still going on. And for us to get into a real recession, the unemployment rate's got to go up. Folks got to lose their job. They got to be fearful of losing their jobs. That's a recession. The other part to that You have to look at how are companies performing. Companies have announced a whole ton of layoffs, a lot of big name companies, but the jobs market data says the labor market is still strong. Retail sales reports. They'll be interesting when they come out later this month. How did retail do during the holidays? The pre-reports, which can be revised and updated, said that it was slower than years past. Okay. Look at the consumer. The consumer savings rate, almost zero. Consumer credit card debt is rising by the day. Billions of dollars over the past month. What was it? 29, 27, 22? It was somewhere in there. $1 billion of credit card debt in a month. Going up, going up, going up. That means the consumer is getting weak because they've gone through their savings and now they're using credit cards. This is what the data is saying. Now, the weaker the consumer gets, it doesn't matter if you have an awesome company or not. You have the best company in the world. But if the consumer doesn't have money to buy your products or services, your company is going to get hurt financially. That's how the cycle goes. And then the consumer's weakened, can't purchase this gadget or service from this place. Now this place has to lay off. Then the labor market gets affected. Then it goes back to the consumer. Well, I just lost my job. I can't buy X, Y, or Z. They're all connected and they move not at the same time. That's why we get pieces of data here and there spread out over time. But they all tell a story when you look at them together. So just remember that part when you're trying to figure out how this economy is looking. I think it's getting weaker. Inflation is still sticky. I'm very curious to see how those numbers play out with the CPI report later this week. Yeah, MULN, which is, I think it's Mullen, and Bed Bath & Beyond have huge swings intraday, 20, 30%. Those are the traders who are trying to get rich quick. That mindset in this market, in my opinion, is not sustainable. If you set a goal for yourself, I'm going to make sure that I have 5% that I've gained in my portfolio on a weekly basis, or 5% on a 2-week basis, whatever your time frame. And you hit that goal and you repeat the process and you hit it again. Doing that over and over and over, that repetition, that's what makes you a great trader or investor. It's not trying to chase these crazy momentum stocks that drop 20, 30%, rise 20, 30% in a single day. Or those that shoot up 60% in a single day, only to drop like 120% the next. So I'm not chasing those. First time here, awesome. Thank you. I greatly appreciate you stopping by. Hopefully you stay and come back. Why do y'all play such? Am I supposed to take the E off of that word? I don't know. I don't know. Let's see here. LOL. Yeah, to to your question. All you need is SPY, Apple, and maybe Tesla. Well, there's an interesting argument you can make about a few of these. Apple. AAPL is ticker for Apple. And if we look at the company, there's a lot of noise out there about Apple. What's true? What's not true? That's the question that we need answered, right? There was news about Apple today. Apple ended up being on the positive side about 0.4% today. It hit its 20-day moving average, and that was resistance. It's got a shooting star type candle here, which is typically a topping pattern, okay? However, Apple just broke out of this falling wedge. It just broke out of it on Friday. And then today, it's just up 0.4%. Huge market cap. It affects how the SPY moves. How SPX, that ticker, how the S&P 500. Apple will be the directional driver for a lot of those indices. Now, if we look just back to the left of where Apple is right now, we can see there was support and then there was resistance at that point. Is this the new support for Apple with its breakout of that falling wedge? I don't know. It could be. But if we look at Apple on the bigger picture, okay, a lot of companies, including Amazon, have all hit that 2019 high, and some have gone farther. If you look at Apple, Apple has held up really well. And it's really just now feeling some pain, but it's only taking itself down to the next level of sideways trading, which was right through here. Okay? We've just gone down a notch. But how many more notches are we going to go down with Apple? It's very possible that if earnings come in negative, we could break this current sideways track that we're in right now and go down to the next one, which is right here between those two lines. So let me open Apple up. The weekly expected moves for Apple, I'll go ahead and tell you right now what they are. But the upper end is 134 for Apple. The lower end is 124. So you have about a $5 swing up or down from where Apple opened this week, okay? Or technically where Apple closed on Friday. So it really hasn't gone anywhere to start the week. Did find resistance at that 50-day moving average. So I find that a bit interesting. Earnings are still 24 days away. Seems like a long time, but it'll be here before you know it. But I do think Apple, it's solid, but I think it's got room to come down. But again, it depends on the data from earnings. Tesla is another interesting one. I like Apple. I like Tesla. But right now, they're in very interesting states, okay? If we look on the weekly expected move for Tesla, the upper end was 123. The lower end is 102, okay? it went up and it tagged its weekly expected move on the upper end before pulling back. It's disconnected from its 5-day EMA, so it's got to reconnect with that moving average. And again, typically 2 to 3 days is the longest it will stay disconnected. So either Tesla is going to move sideways from here so that 5-day EMA can come up to it, or it's going to pull back at some point so they can reconnect. That's what I see right now. It was a big jump for Tesla today, but it did pull back some in the afternoon with the Fed speak. So I like them all. And then the SPY, I typically use ticker SPX, but if you're just dollar cost averaging into the stock market, you really can't go wrong with the SPY. Sure, last year was a fluke, but you can typically get some pretty good returns. Now, do we really have this shooting star candlestick today? It looks like it, which is typically meant that we start pulling back. It is possible. The SPY is disconnected from its 5-day EMA too. When we go to the 15-minute time frame, let me put that 5-day EMA on here so you can see it for the SPY. It went from a neutral flat position, okay, to now it's starting to incline, which should give you a positive, a bullish bias in the short term, okay? But the turnaround in the afternoon, in the Fed speak, saying the Fed's willing to over-tighten to meet its objective, spooked market participants. Will Fed Chair Powell, who speaks in the morning tomorrow, continue that concern from market participants? 1 hour retracement for tomorrow. Gotcha. Meta is looking. All right, let's pull up Meta next. Let's go. META for Meta platforms. All right, where'd my 2 lines go? There they are. Okay, 15-minute time frame. The upper end of the weekly expected move for Meta is 136. The lower end is 123. So 15-minute time frame. It popped up this morning, and then it traded sideways for the majority of the day. And then we get the Fed speak, and that knocks it down. Now, it did fill in the gap this morning that was created. So that's good, okay? You do have a inclining 5-day EMA right here. That should give you a bullish positive bias in the short term. So I agree. I concur. Meta is in a good spot right now for the short term. It's looking good. All right, let's go look at the daily view here for Meta. Let me pull it in. And unfortunately, it does have a bit of a wick on top of the body of the candle. But from that big gap down that it had right here, that nasty day there, okay, it broke out of this ascending triangle. Real nice. It actually came back and back tested it. And then it pulled away on Friday, nearly 2.5%. But today, about 0.5% was given up, and it's got a wick on it. And where it closed, or I should say opened, where it gapped up to, is right in the middle of all of this chop, okay? And on the volume shelf profile, that's actually the point here, okay, at that particular price point, around 130 for Meta. So if Meta's got to break $130 a share and close above it for me to really, really be excited about this. The biggest thing, though, in the short term for Meta is it needs to reconnect with its 5-day EMA. It is not connected. Remember, on the 15-minute time frame, it is inclining, but it's disconnected. So either Meta Platforms is going to go sideways or pull back a little bit so it can reconnect with that 5-day EMA. Because remember, it's typically 2 or 3 days. That's the longest the 5-day EMA stays disconnected from any candlestick. That's the body or wick. Today is day 1 of being disconnected because it did connect on Friday. So yeah, Meta's looking pretty good. I'll definitely say that. Netflix still going? Good question. NFL. Oh, got to get my cursor over here again. NFLX for Netflix. Netflix was our top pick last week, our #1 momentum stock out of our the top 10 that we do. We release them before Tuesday's open, and Netflix has got the momentum too right now in its sales. And it looks like from the breakout of the rising triangle here, it looks like Netflix still has some momentum to push higher. Now, for Netflix, the lower end of the weekly expected move is at 299. The upper end of the weekly expected move is 331. And remember, price typically will close within those two price points. I don't know how good my drawing here is going to be, but it is not looking so hot. But at 86% of the time, this thing isn't real good at doing dots. But 68%, my gosh, dyslexic, huh? 68% of the time, it will close within those two price points by the end of business on Friday. So can Netflix work its way higher and get to this point right here by the close of business Friday? That's what we're looking for. Looking for Netflix to do that. However, in the short term, Netflix is disconnected from its 5-day EMA, and it's got to reconnect. Today is day 1 of that disconnect. So something that Netflix could do is stall right here where it's at and move sideways so it can reconnect to its 5-day moving average. Now, looking here on the chart, let me just point it out for you. The 5-day EMA is inclining. Price action, it is above it. Price action has had some support here and support here. So price action is inclining too. It's going higher. We got to watch this point here at about $320 a share. That's a point to watch for resistance, okay? As we bring a few more days on here, you can really see that price action is working its way higher. That resistance that we met today at about $320 a share, Was that resistance or was that from Fed speak? That's what we need to parse here. Which one was it? We'll find out tomorrow. That's for sure. Okay. So yeah, Netflix is looking good, but I think Netflix could pause just for a little bit to reconnect with that 5-day moving average. Because if we bring it back together, well, I need to go back here. Can you still? Yeah. The last time Netflix was connected, right here. Okay. And then it started to move higher and break out of it. So it was in a neutral structure and then broke out of that. Now it's in a bearish structure. I'm sorry, bullish structure. Get these words right. All right. So Netflix still looks good for it, but it needs to reconnect with that 5-day EMA. That would be the only thing that I'd be concerned about for Netflix. It's all about the Dixie. Yeah. The dollar is major. It broke loose today out of its trading range that it's been in, but it's not below my critical point. 102.5. That's my critical level. It's if 102.5 gets broke on the dollar, then I think the dollar is going to fall. It'll fall quite a ways. Maybe like there's a support area probably between 97 to $98 a share, not a share, the currency. It could go to 97 to 98 when it breaks 102. So that would be a pretty substantial move lower, because that is right, it's right here. Let's see, that would be the top end right there. And then the bottom side of this is right here. So if the dollar does break that 102 area, which is, I got it marked right there, then it'll come down here to this box. And then maybe start trading in a range at that point. So that's what I think about the dollar on the bearish side. Now the bullish side is that it bounces off of that 102 level. Maybe, maybe 101.42 is the absolute, because that's right where this support was before it either completely breaks down or it pops back up. But there is a direct inverse correlation between the dollar and the SPY, and it is pretty significant. The dollar drops, the SPY goes up. The dollar goes up, the SPY goes down. Same thing with the SPX. How does bonds work with the dollar? Well, typically, and I can put, oh, that's not what I wanted. All right, so the dollar is here on the screen, right? I can put an overlay. Let's just use let's just use TLT. Okay. So when you're looking here, the orange line that's on the bottom, this is your long-term bond. All right. The ticker symbol is TLT. So when the dollar is strong, TLT, your long-term bonds, are weak. It's just like the SPY. The relationship the dollar has with the S&P 500, it's the same inverse correlation to your bonds, TLT, for example. So if the dollar does break down, then the TLT will continue going up. And right now, TLT, it's in a breakout zone right now, if that's what you want to call it. TLT broke out of its long-term resistance channel, which was right here. It came back and back tested it and successfully bounced off of it. And one other thing to note is, since we are going into phase one of the cycle, bonds outperform right here. Bonds outperform stocks and commodities. So we're over here on the left side of this chart going into stage one, where the economy starts to contract and bonds do well in that environment. And then when we get to the bottom of the recession, if you want to call it, then stocks and bonds start to go up. Commodities still go down. So we should be entering the left side of this chart. We should be entering stage one of the cycle, which means bonds will be performing well. The dollar will probably be weakening even further. Okay, 3 Tesla scalps today for 370. Thanks to your channel, 5 EMA, and always running SPY and Tesla side by side, watching both as they moved for hints of direction change. Great job. Awesome. Awesome. I am very proud of you. Great job. Great job. You can definitely get scalps out there. Tesla, with its volatility, typically is a good one. Thank you. I greatly appreciate the mention there, and great job. Great job. That most market participants do not understand the importance of the 5-day EMA. It is the most tagged moving average, and it is very important for understanding the direction that price action is going to go. It's also a very useful tool to not get sucked in to FOMO, fear of missing out. So awesome. I'm super glad to hear it. Crush Gruben stocks are moving. Yeah, that's funny. Bitcoin is almost ready to blow, as in blow up, break out. I think Bitcoin is going to be in this flat, sideways cycle until 2024. I don't think Bitcoin's going to go much of anywhere this year. I just think the sideways movement, sure, it's going to have sometimes where it goes up, it's going to have sometimes where it goes down, but I think this sideways motion here, I think that's where it's going to be at for a while. For the majority of this year, if not longer. The next halving event is in 2024, which means 2025 should be the next real big bull run. Okay. For Bitcoin, at least that's my thoughts. Okay. It can definitely move. it'll have its time. I mean, you can see within the sideways motion, you know, there's some rallies, some pullbacks, but I think it's just going to be sideways for about a year. 15.5 is my low point for Bitcoin. And then going all the way up to about 20,000, maybe a little bit more. I think that's where Bitcoin could go. Let's see here. Just day trade opposite of the dollar. You have a better day. That is true. The dollar is important. Like meme stocks. Meme stocks are just absolutely, you know, the BBBY is one that really gets me thinking, like, what in the world? What's going on here? For some reason, I think I need to reset TradingView. It's got caught up here. Yeah, I do. I need to reset TradingView. For some reason, it's got the dollar stuck with the comparison to TLT. And it's not giving me the price points on the right-hand side anymore. Uh-oh. Okay, well, I got to reset the chart. Are you still covering Workhorse? Yeah, I've talked about it a little bit. I've looked at the charts, WKHS. I just don't think they've got a lot going on right now. HS. And if if your GMs and Fords, and even if Tesla did it, but these bigger name companies that are established with their vehicles now doing electric, it's going to be much harder for companies like Workhorse to break through in the industry. What Workhorse would need to do is be as narrow focused as possible in achieving their goals. I do think Workhorse could be a candidate for an acquisition from a larger manufacturer that could pick up maybe some of the drone technology that they're missing from Workhorse is a possibility. So I don't think Workhorse is going to go mainstream like a Ford or a GM product, but it can have its own audience. Even if it's narrow, it can do it. And I think it can work out for them. Like there's no news here. So like I said months ago about Workhorse, they just need to keep their head down, keep pushing forward, and I think the drone will be better than the actual truck itself. Great coverage. Thank you very much. I appreciate that. All right, I'm going to go ahead and let's wrap this live stream up. We've been going for an hour and 45 minutes. I can't believe the time goes by so fast today. Oh, real quick, do you think, and you are absolutely welcome, memes are rubbish with no upside? Memes are just like crazy out there. Thank you for that. Appreciate it. Do you think them entering production and actually producing vehicles might change some? I really think that they're going to be niche. They're going to be very focused on solving a very specific problem. And I really think it's the drone is Workhorse's best offering. I really believe that. And again, being acquired by a larger, manufacturing trucking company that maybe doesn't have the capabilities of drones, and they need to add that part to what they currently have, and they could just go and purchase Workhorse. I think Workhorse is an acquisition target. I really do, especially for the drone. You are very welcome. Absolutely. Okay, I'll be back here tomorrow after the market is closed. We go live somewhere between 7:30 and 8. Every day the market is open to talk about what happened, why it happened, because that's very important to understand, and what to expect going forward. So I'll be back here tomorrow evening. Hopefully you'll be here to join me as well. And I'll get TradingView reset so it's working again. It doesn't have the dollar attached to each ticker I plug in. So thank you guys and gals so very much for joining me today. I greatly appreciate it. Each and every one of you are awesome. Good luck tomorrow with your trades, and I'll see you in the next video. Take care.